Where would you put £1 million today? I've analysed stocks, gold, crypto and property, and one of these absolutely destroys the others. Here's what the numbers show. Hi guys, I'm Jim Holland from Dan & Jim Property, which I run with my brother in the northwest of England. We buy houses and rent them out either as whole properties or by the room. And I've recently just completed my first HMO conversion, transforming it from a 3-bed house into a 6-bedroom property, and raised £160,000 in private investor funds to make it happen. Right now, I'm focused on filling my pipeline with 3 to 5 projects over the next 12 months, working towards my bigger goal of building a portfolio of 50 HMOs. So I spent the last few weeks analysing what happens when you put £1 million into stocks, gold, crypto and property. Nothing theoretical, just real numbers. And most people only look at returns. But if you've got serious capital to deploy, you need the full picture. Returns, leverage, cash flow, tax, and control. So if you want to see real numbers and understand why I'm focused on property, make sure you hit the subscribe button and let's get into it. Let's break down the first asset class, which is stocks. Now, the historical returns of the S&P 500 have averaged around 10% annually over the long term. The FTSE 100, since I'm based in the UK, has done slightly less, around 7 to 8%. But let's use 10% to be generous. So if you'd invested £1 million today and left it for 10 years, you'd be looking at roughly 2.59 million, which isn't bad at all. Now the pros of stocks is the liquid. You can sell them in literally seconds, and it's truly passive. There's no tenants, no maintenance, and nothing to manage. And diversification is really easy as well. With index funds, you can spread your money across every company within a different stock exchange. Along with this, the barrier to entry is really low. Anyone can open a trading account and start investing pretty instantly. And honestly, it's probably the most passive and easy way to invest, which is ultimately why so many people do it. But here are the downsides with stocks. First off, there's no leverage. Unless you use margin, which is risky and can wipe you out. Normally, your £1 million buys you £1 million worth of assets. And that's it. Second, there's zero control. You're a passenger. If a CEO makes a bad decision, the market crashes or sentiment shifts, you can't do anything about it. Thirdly, tax. You've got your ISA allowance, which is £20,000 a year, but if you're talking about dropping £1 million, you'll eat through that pretty quickly. And after that, you're paying capital gains tax on your profits. And fourth, this is absolutely massive, market timing matters enormously. In January 2022, your £1 million became 800k by December, and there was nothing you could do about it. If you invested in 2007, you waited years just to break even. So in summary, stocks are truly passive, easy to access, and have decent historical returns, but zero control, no leverage, and tax after your ISA limit, and you're completely at the mercy of market timing. Now let's look at gold, the so-called safe haven asset. Gold has averaged 7 to 8% annual returns historically, but it's been very inconsistent. Some decades it does nothing, and other decades it spikes massively. If you invested £1 million for 10 years at 7%, you'd be looking at £1.97 million. So lower returns than stocks and much more volatile. So what's good about investing in gold? It's seen as an inflation hedge, and the reason is it's not like a fiat currency, where governments can just print more of it. Fundamentally, there's only a certain amount of gold on the planet, which gives it inherent value because the supply is constrained. And it's a tangible asset you can physically hold if you want to. And there's no counterparty risk. You're not dependent on a company or a government. And it tends to perform well during crises. When the market crashes, gold often goes up. But here are the major problems with gold. First off, there's no income or yield. Gold just sits there. It doesn't produce anything, doesn't generate any cash flow. You're betting entirely on price appreciation. Second, if you're holding physical gold, there are storage costs. And if you're holding it through an ETF, you're normally paying management fees. Third, there's no leverage available. No bank is going to lend you money against gold. Your £1 million buys you £1 million worth of gold, and that's it. Fourth, the volatility is extreme. If you bought gold in 1980, you would have waited 25 years just to break even. 25 years of your money doing absolutely nothing. And fifth, you're still paying capital gains tax on any profits. So in summary, gold is a really good insurance. It's not necessarily an amazing investment. It doesn't produce anything, doesn't generate cash flow, and you can't leverage it, and your £1 million just sits there and hopefully goes up over time. Next, let's talk about the one everyone's been waiting for, and that is of course crypto. Specifically Bitcoin, since that's what most people think about when they talk about crypto investing. Now, the historical returns for Bitcoin are a bit wild. Bitcoin has had insane returns for early adopters. People who bought it at £100 or £1,000 have made life-changing money, but it's also had insane volatility. You can have years where it's up 100% and years where it's down 70. So if you invested £1 million of Bitcoin, depending on your timing, you could have made 10 million or it could have gone down to 200,000. Market timing is absolutely everything. So what's so good about about crypto and Bitcoin? Well, the potential is for massive returns. If you time it right, the gains can be astronomical. It's decentralized, so no government or bank can control it. Similar to gold, there's only ever going to be 21 million Bitcoins because of the way it's set up on the blockchain. And this gives it inherent value because it can't be tampered with like fiat currencies, which again is why it's generally seen as a good long-term hedge against inflation. Crypto is a 24/7 liquid market, so you can buy and sell at any point. And again, similar to stocks, the barrier to entry is really low. Anyone can buy crypto with a few clicks. But there are massive problems with Bitcoin, extreme volatility being one of them. We're talking 50 to 70% drops in a matter of months. So if you can't stomach watching your £1 million turn into 300,000 overnight, it's probably not for you. Now again, there's no cash flow. Bitcoin doesn't produce anything, doesn't pay you dividends, you're entirely betting on price appreciation. And there's also regulatory uncertainty. Governments are still figuring out how to handle crypto, and that could change the whole landscape. And again, there's zero control. You're at the mercy of the market sentiment, Twitter influencers, and whatever Elon decides to tweet on any given day. And in theory, it could literally go to zero. There's no underlying asset, no cash flow, and no government backing. If everyone stops believing in it, it could be worth nothing. And again, this is important, you can't leverage it. Now this might change as crypto becomes more integrated in society, but at the moment we're still at the stage where no bank is giving you a mortgage based on your Bitcoin. So your £1 million buys you £1 million worth of crypto, and you're still going to have to pay capital gains tax on any money you make. I think it's probably prudent to have some crypto at some point. It's essentially the digital version of gold, but it's still very volatile at the moment. People who made millions bought Bitcoin at £100, but if you're buying at £50,000, you're not that early, and you're hoping someone else is going to pay £100,000. And for me, right now, you can't leverage it, which brings in property. And specifically, the way I invest in property through HMO conversions. UK property has averaged around 8% capital appreciation historically, similar to stocks, just slightly less. But the 8% figure completely ignores three massive advantages. Advantage 1, leverage and capital recycling. Now this is an absolute game changer. With stocks, gold and crypto, your £1 million buys you £1 million worth in assets. With property, it's completely different because of how refinancing works. Now let me show you with some real numbers from how I structure my deals. To complete a HMO conversion, the all-in cost is around £340,000, covering the purchase and the conversion. But once the project is complete, you can refinance it based on the new commercial valuation. For example, let's say it was £400,000. You can borrow 75% of that, which is £300,000. So you pull £300,000 back out and you've only got £40,000 left in the deal. Now if you've got a property generating £1,200 profit per month, that's £14,400 per year, but you've only got £40,000 tied up in the deal. That's a 36% cash on cash return on the capital you've actually got left in the deal. And here's where capital recycling gets really powerful. Let's say you've got £1 million to deploy and you're doing a blend of HMOs and buy-to-lets to balance your portfolio. You can do 10 HMO conversions at £340,000 each. After refinancing, you've got 40k left in each deal. That's 400,000 tied up in HMOs. Those 10 HMOs are now worth 400,000 each, which is £4 million in assets. And they're generating £1,200 a month, which is £144,000 a year in cash flow. With your remaining 600k, you can buy standard buy-to-lets at £37,500 deposits per property. You can buy around 15 buy-to-lets worth 150k. That's another £2.25 million in assets. Those buy-to-lets generate around £300 a month in profit, which is another £54,000 a year. So your £1 million now controls £6.25 million in property, generating close to £200,000 per year in cash flow. That's a 20% annual return just from cash flow before any capital appreciation. And here's the real kicker. When properties appreciate at 8%, you don't get 8% on the £1 million you put in, you get 8% on the full £6.25 million. That's £500,000 equity growth per year. Now we need to be clear about something. You can't deploy all of this overnight. Each HMO takes 340k up front, so with 1 million you're doing 2 to 3 at a time, waiting 6 to 9 months for each cycle to complete, get tenanted and refinance before you get your capital back. So this is going to take 3 to 5 years. But show me another asset class where 1 million turns into 6 million plus, generating £200,000 a year in that time frame. Stocks in 5 years at 10% compound, your 1 million becomes 1.6 million. No cash flow during that time and zero control. Gold and crypto can't do that with any reliability. This is long-term wealth building, not a get-rich-quick, but it's the most powerful wealth building vehicle available. And this is super safe leverage. Banks have been lending on property for hundreds of years. It's not margin trading where you can get wiped out overnight. A major advantage number 2 is cash flow. With stocks, gold and crypto, there's no income unless you sell. With property, there's monthly rental income from day one. My first HMO generates £1,200 per month in profit. And when you recycle capital through refinancing and a blend of HMOs with buy-to-lets, you scale that across a substantial portfolio with the same £1 million. Advantage number 3 is control. With stocks, gold and crypto, you're a passenger. With property, you're the driver. You choose the location, the property and how to convert it, and the tenants along with the management. You can force appreciation through refurbishment and conversion. I turned a 3-bed into a 6-bed and created significant equity through active management. You're not sitting around hoping the market goes up, you're actively building value. Now there's tax efficiencies as well. With property, you've got mortgage interest considerations, capital allowances on furnishings and conversions, and you can structure this all through a limited company for efficiencies as you scale. Now there are downsides. Property is far from perfect. It's not liquid. You can't sell a house in 24 hours like you can with stocks. And it does require active management, or at least good partners who can manage it for you. There's definitely a higher barrier to entry. You need knowledge, a network and system. And you need to understand deal structure, refinancing and capital recycling. There's also a regulation risk. The government keeps changing the rules for landlords, but I actually see this as an opportunity. It's squeezing out the amateur landlords and creating space for professional operators. I've actually done a full video breakdown on how the challenges and opportunities in property investing have shifted, which I'm going to link at the end of this video. And property is cyclical like most markets. Prices go up and down, but it's far less volatile than stocks or crypto. And throughout the whole time, you're generating cash flow. So if you've got £500,000 to £1 million to deploy, property done correctly is the only asset class where you can safely use leverage. Recycle your capital through refinancing and generate immediate cash flow and maintain full control. But you need someone who knows what they're doing. You need the operator who understands deal structures, refinancing and capital recycling. You also need the deal flows, the systems and the experience. That's where partnerships come in. And that's the model I'm building, so let's wrap this up. So based on everything which we've covered in this video, my opinion is clear. Property is the best place to deploy serious capital. Here's why in a nutshell. Stocks and gold give you passive returns but no control and no leverage. Crypto is extremely volatile. Property done correctly lets you control £6 million worth of assets with £1 million, generating £200,000 a year in cash flow and building long-term wealth through safe leverage and capital recycling. So the question isn't even close in my opinion. Now if you're watching this and you've got serious capital to deploy, you're probably going to be thinking one or two things. Number one, I don't have the time to learn property from scratch. I've got a business to run, a career and a life. Or number two, I don't want to deal with the tenants, the boilers and all the day-to-day hassle that comes with being a landlord. And I structure my partnerships with private investors to get around these 2 points. You provide the capital and I provide the expertise, the deal flow, the systems, and I handle all the day-to-day operations. And we split everything 50-50. You get the returns, the leverage, the cash flow, and the control of property without having to become a full-time property investor yourself. And here's why that matters so much now. We're in a 10 to 20 year window where professional operators are going to absolutely thrive in property. Amateur landlords are being squeezed out by regulation, and private equity hasn't fully moved into the HMO space yet. Right now, there's a massive opportunity for people who can operate professionally and have access to capital from partners who see the opportunity. And I'm looking to line up 3 to 5 projects over the next 12 months. So if you've got capital looking for a home and want to explore working together, there's an investor waitlist in the description below. Fill it in and let's have a conversation to see if it's going to work for you. Thanks for watching, and if you found this valuable and you want to follow along as I document this journey from 1 HMO to 50, make sure you hit the subscribe button. And I'm putting out new videos about everything to do with property investing every single week. So make sure you subscribe and don't miss them. And check this video about how property investing has completely changed in the UK. See you in the next one.